Ladies and gentlemen, gather around. Imagine for a moment you're in the midst of a bustling stock market. Every ticker bursting with energy, and over the speakers an electrifying announcement cuts through the noise. It's Nvidia Day, and the market is buzzing in anticipation. We won't give away all the spoilers yet, but let's just say Nvidia is preparing to report its second quarter earnings, and the stakes couldn't be higher. The tech titan has experienced a meteoric rise this year, much like a rocket waiting for a final countdown. But will the excitement extend beyond the headlines, or will we see a twist in the tale? Alongside Nvidia, Palantir too has grabbed the spotlight, and there's more than meets the eye with this data analytics juggernaut. Stick around, this is a roller coaster you don't want to miss. Hello everyone, and welcome back to Investocracy.
A lot riding on this report. You have a new note out. Let's just start with this. I'm just looking at the estimates. These are the estimates. Revenue growth of 112%, EPS growth of 125%. Just astronomical. It's like a head shaking your head, and you're one of the biggest fans of this company. Can this company meet these expectations? Can it even exceed them? Is just meeting them good enough for investors?
Well, medium is not good enough, but I believe this is going to be a drop the mic moment for the godfather of AI, Jensen Nvidia, because all of our checks are showing this is accelerating. And I think the street, like you said, every quarter, prove it. This revolution is just starting, but it all starts with Nvidia. In my opinion, it is the most important earnings, not just of the year, potentially in many years, because of what this represents in terms of tech.
So I've been asking a lot of people this. Is it the earnings that matter or the guidance? Because the expectations are lofty. Let's say they meet or beat when it comes to revenue and EPS, but the guidance isn't what people are expecting. What does that do to the stock? What do you think it does to the market?
It's all about the guidance. But all, I mean, we just got back from Asia. All of our checks are showing Street is still underestimating this acceleration. Because right now, the only game in town is Jensen. And really, if you look what NVIDIA is doing, especially from chips coming forward, this enterprise demand is just starting. And in my opinion, of course, Powell, Jackson Hole is so important.
Huge, obviously.
But the market, what it's going to do for the rest of the year, and I could argue even in 2025, it starts with this NVIDIA earnings. And I expect, get the popcorn ready. It's going to be a
You say this every quarter, Dan.
No, but this is going to be a showstopper showing where the revolution's going.
Okay.
And I think the skeptics continue to get proven wrong.
So, Nvidia has been all about the fuss this week. The company's second quarter revenue expectations catapulted by an astounding $170 million within just the last 48 hours, now standing at $28.84 billion. To put that into perspective, $170 million could buy you a Picasso painting, maybe not as valuable as Nvidia's cutting-edge GPUs, but you get the idea. But whisper numbers, those unofficial predictions swirling in the alleys of trading floors, hint at even higher benchmarks, possibly making it an even tougher audience for Nvidia to please. With analysts from Wedbush, Raymond James, and KeyBanc all singing praises, why the concern? Well, Nvidia is no stranger to creating buzz. Think of it as the Elvis Presley of tech stocks. It's got rhythm, it's got moves, yet reality sometimes has a hard time keeping up with the hype. Over 95% of analysts tracked by Visible Alpha have a buy rating for the stock, and projecting a price target of $144.83, a good 12% above Friday's closing price of $129.37. That's not chump change. Imagine a friend who keeps hyping up their new, improved homemade pizza. At some point, you wonder, can it really be that good? Wedbush analysts have coined Nvidia's potential earnings report as another drop-the-mic performance. Oh, the pressure! Massive enterprise demand for AI and increased spending by heavyweights like Amazon and Google contribute to this optimism. Yet, there's a reported delay on Nvidia's upcoming Blackwell AI chip that has some sideline analysts raising an eyebrow. Despite the big promises, some caution is advised. Now, Nvidia may have briefly worn the crown as the world's most valuable company back in June, boasting a whopping valuation nearing $3.2 trillion. The man who takes the spotlight during all this? CEO Jensen Huang. He's the ringmaster of this grand circus, worth a cool $113 billion. As he gears up to reveal the company's numbers amidst a whirlwind of AI euphoria and skepticism, investors are left pondering if the reality will indeed match the hype. Will Huang be able to quell the anxieties around AI, or will he add another twist to this dramatic saga? Only time will tell. But before we go through it, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video, where we switch gears to another player in this stock market drama.
I want to get back to your note. According to your research, for every dollar spent on Nvidia chips, it kind of flows through to the rest of the tech sector to $8 to $10. What does that mean for some of these other stocks?
That's the most important thing. Because remember, it's not just about NVIDIA. It's about the multiplier. It's about the revolution, the $1 trillion of CapEx. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why it's so important in terms of what NVIDIA says for this bull market to continue.
So you're saying it's a broad tailwind. It's not just it's a rising tide that's going to lift all boats.
Because it's not just
even in software, because software seems to be under pressure, or at least it was when it comes to this AI craze, and it seems like a lot of the money that was going to software has gone to chips.
But even next week, you'll hear from Benioff and Salesforce. What are they focused on? AI. Look at McDermott and ServiceNow. In other words, it's just starting now. The software wave is a second, third derivative. That's why I think we're sitting here a year from now, NASDAQ 20,000, and it continues because now the rest of this party, it is only 9 p.m. in the AI party
that goes to
that
when?
We believe it goes to 4 a.m.
To 4? Not to sunrise, but it stops at
4 a.m.
Now, Palantir Technologies. This isn't just another tech company. It's a conundrum wrapped in an enigma, draped in complex algorithms. This year, Palantir's stock has soared like a tech unicorn leaping over rainbows. A Northland Securities analyst had a word of caution recently. Hold your horses before diving into Palantir stock. Despite its impressive run, waiting for the stock to cool might be judicious. Think of it as resisting that mouth-watering coffee cake fresh out of the oven. You wouldn't want to burn your tongue now, would you? This stock has charmed the market, yet like every tale with an unexpected twist, there's more lurking beneath the surface. While Palantir's stock has cooled off slightly this year with a 0.44% dip, the company's long-term growth prospects remain strong. Analysts note that Palantir is a leader in leveraging artificial intelligence for data analysis, a field poised for major expansion. Though some Wall Street analysts advise waiting for an ideal entry point before investing, Palantir has already built an impressive track record that speaks to its potential. Much like Nvidia, Palantir is spearheading innovations that will shape the future. And let's not forget, Nvidia just posted a truly astounding $26 billion revenue quarter, enough to acquire every Starbucks on Earth. This remarkable achievement demonstrates Nvidia's established momentum. Rather than fixating on short-term stock fluctuations, the big picture reveals Palantir's vital role in the AI revolution. With transformative technologies still in the early phases, Palantir has only begun to tap into a vast market. Patience now could pay off handsomely down the road. But that's not all of it, so let's keep rolling.
More on NVIDIA is Patrick Moorhead, founder and CEO of More Insights and Strategy. And, Patrick, look, a couple weeks ago, like maybe expectations would be beaten down. The stock was, off 20%. We've had this huge rally back toward the highs since then. What do you think the embedded expectations are for NVIDIA right here?
The expectations at a minimum are they're going to meet expectations. But I see that, this train that can't be stopped, I think they're going to do better than anybody can expect it. Because there's a lot of things people don't understand about NVIDIA, right? This is less about just fulfilling demand. And don't get me wrong, the demand from the hyperscalers are huge, but there are new types of opportunities that people don't fully realize in that. First of all, NVIDIA isn't just selling chips. It's selling multiple chips. It's selling entire systems. And add on top of that software and even into a larger enterprise market, I don't think these are being factored in at this point.
Imagine that for a second. NVIDIA owning your morning latte. Demand for its GPUs hasn't just been strong, it's been voracious, driven mainly by the big tech behemoths, chasing the holy grail of ultra-powerful AI models. It's like showing up to a potluck with an investment salad. It looks healthy, but people would prefer the hearty lasagna. Investors heard Pichai loud and clear when he stated the risk of underinvesting in AI was dramatically higher than overinvesting. Still, the doubling of capital expenditure to $13 billion was difficult to ignore. But before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so If you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And we do know a fair amount, obviously, after the earnings reports from some of those big platforms, that their CapEx budgets remain pretty high. I guess there's still going to be this reserve, though, of doubt about whether that's sustainable at a multi-year look ahead, because, there is a sense out there that there's an urgent build-out happening right now, and we're not quite sure how long it lasts.
Yeah, on a multi-year basis, you're absolutely right. There has to be downstream benefits, efficiencies and effectiveness gains that we'll see through software companies, but most importantly, software companies to enterprises. And on the consumer side, we're going to have to see uplifts, let's say, on advertising revenue, services revenue from those markers. If those don't start hitting, I think in the next 12 to 18 months, investors are going to call to have a cool off on CapEx expenditures. But I believe we are all clear for at least 12 months, maybe 18 months. That's unless, barring something economically very negative happens that's outside of NVIDIA's control.
Now that's a spicy meatball, folks. And let's not miss the elephant in the room, NVIDIA's current standing in the stock market. The stock is up a staggering 168% this year. It's like the golden retriever of stock picks, loyal, dependable, and constantly wagging its tail. But does this gallop match reality, or are we all just following the hype-driven chase? As we evaluate Palantir alongside, it's clear both stocks sit on intriguing precipices. While Palantir's analytical prowess offers a hopeful vista of what's possible, NVIDIA's cutting-edge tech anchors us in the profitable present. It's a tectonic sportsbook clash, future potential versus current profitability. Both are vying for the investor's hard-earned dollar, and the spectacle is truly gripping. So, whether you're enchanted by NVIDIA's rapid ascent or intrigued by Palantir's potential, the stock market narrative this year has been nothing short of dramatic. With NVIDIA, you're looking at a stalwart in AI hardware with proven track records and an exciting future. The current projection indicates it can rise well beyond the $144.83 analyst target, providing a promising ground for investment. The recent earnings anticipation has certainly driven home NVIDIA's relevance and demand in today's tech-heavy landscape. Palantir, on the other hand, feels like a thrilling underdog capable of profound impacts, albeit with cautionary advice from analysts to wait for a dip. So, what do you think, fellow market enthusiast? Ready to dive headfirst into NVIDIA's promising future, or waiting patiently for Palantir's next move? And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.